Mayank Pareek, Joint MD, Jain Resource Recycling, joining in on the show. Mayank Pareek, thank you so much for speaking to us. Now, one of the reasons that we're speaking to Jain Resources today is because we wanted to look at companies that have listed this year and have given positive returns. Jain Resources is definitely one of them. Now, let's just talk about the outlook and start over there, Mr. Pareek, because your Q2 numbers looked fairly decent. Are you seeing that momentum continuing?
The momentum, yes, of course, will continue because we are dealing in the base metals, and base metals are the ones which actually drive the economy or are directly driven by the growth of the economy. So this momentum will continue.
You also had a spike in your Q2 working capital. Can you tell us a little about that? Do you think this is now a structural increase that you have seen, or it was a one-off?
So no, it is a natural increase because we are working hard to jack up our volumes. And when you jack up your volume, suddenly you have a lot of inventory coming in, which has to be processed. So there is a transition period when you have increase in working capital as number of sales days.
Mr. Pareek, good morning, Neeraj here. You have shown a bent towards upping the revenue via increased capacities and increased efficiencies. I believe your margins too over the last 4 or 6 quarters have gone up quite a bit. What is the trajectory? Because in this business, I presume it will be very difficult to have margins which are northwards of high teens, right? So would the upcoming upticks in revenues and profitability be a factor of sales and volume growth, or could you do better on the operational front even more from here?
So I would say it is a mix of the two. In fact, when we increase the volumes in the same plant, the fixed costs actually get apportioned among the larger volume, and then profitability, of course, increases. But then we also work on enhancing the efficiencies, creating the value addition by, for example, we started taking out tin from lead. The same tin was going as alloying element along with the lead. So these types of innovations actually create addition in the profitability.
Okay, but is there I mean, just by the nature of the business that you are in, and I know you are doing newer things almost every third quarter, which is what people invested in your firm tell me. But what is the upper limit to where margins can be expanded to over the next 2-3 years when all of your efficiencies and capacities come on stream?
So on the profitability part, the margins from here, and if we
on the operational, on the EBITDA margin front, I'm talking about.
Volumes go up, and we do the further of operational innovations, or we bring about the efficiencies. The margins from here can go up to the extent of 1.5%, I believe.
1.5 percentage points. Interesting. Okay. I want to ask about a couple of things, Mr. Pareek, and good morning. This is Alex here. Specifically, your quarterly finance cost after utilization of the IPO proceeds, what is a run rate that you expect to hit?
Finance cost definitely has to go down a little, basically because of the IPO proceeds on the one hand, and going forward owing to the increase in the volumes on the other hand.
Okay, I was trying to get a sense of how much it would go down. No sense as of now?
Let the number come out. Putting number to it would actually be slightly premature.
Understood. I understand that.
But you would see a better performance.
Okay. Let me ask about the copper value-added project. And that was supposed to come on stream in the first quarter of the next financial year. That is on track. And what are the implications of that when you talk about your margin? And you said overall you expect that margin profile to go up by a further 1.5 percentage points. What could the contribution of this new business be?
So coming to the progress on this project, this is on the track, and we are at pretty advanced stage now. I hope by the end of this financial year or beginning of the next financial year, this project would be commissioned. I believe within this financial year, this will be commissioned, and this will come in the full form in phase manner. So we have planned it in 4 phase manner. Uh, Starting from this end of this financial year to the first quarter of the next financial year, this entire project will be implemented. As far as the increase in profitability owing to this project is concerned, this is definitely going to contribute somewhere around 1% to the overall profits when it is in the full-fledged manner.
Mr. Pareek, just wondering about your mix. Of course, exports is 60% plus. Is there any kind of concern or headwinds on what is happening geopolitically? Where is most of your exposure? If you can give us a sense there.
Because most of our exports, if you see, are to the East Asian countries, and I don't see any impact due to geopolitical situations. The customers are doing good, there is good demand, and we are exporting.
And exports will continue to have lion's share of revenues going ahead. Is the focus more on out of India markets?
As a matter of fact, we have focus on both the markets. It is actually the price that drives. And occasionally it is India market who gives better realization and the sales is diverted to India market. Our product is well recognized, well established in export markets, so it is pretty easy to sell in export markets. But giving a direction, I suppose, as far as the copper is concerned, it is India market where it is catching up, and the sale in domestic market will keep growing as a percentage in Indian market, while on lead, I suppose it will be more export dominated.
Pareek, one question from my end on the raw material side. What is the comfort that you have in this quarter and in the fourth quarter? Do you have some idea of what the trajectory will be?
Raw material, as a strategy, we have worked pretty hard on sourcing the raw material, because in our business, it is the story actually starts with the sourcing of the raw material, and that is the key to success. We have put in a lot of effort in improving our sourcing, and it has started giving results. We have good inflows, and is going good.
Thank you so much for speaking with us.